Good evening, everyone, and welcome to Stock Durbar by Team William O'Neill India. So it's been a tough second half of the February, especially the last few sessions. The market closed in the red for the fifth straight session. Right. So if you can see the Nifty chart over here, so we found the resistance near the 50 DMA, and there was some expectations that 50 DMA might be something which is hard to move out of. But the good part was that the 10-week moving average. If I take you to the weekly chart, so yes, this red line 10-week moving average. So Nifty closed above that level last week, and then it brought some positivity in the market. But however, Nifty failed to close above its 50 DMA and reversed sharply from there. So this was the reversal day. If you can see, ऊपर तक गया 50 DMA reclaim किया, but the closing was near the day's low, and from there we saw that the Nifty was falling. So today was the fifth session when Nifty closed lower, and in fact before that one also, though it closed a bit flattish to higher, but yeah, overall the action was weak on the reversal day also. But one thing which is to note is the volumes. Just look at the volume bar. The volumes have been very low. They are 20, roughly, if you count it last couple of weeks, they are 20% below average volume. So whenever the market is correcting or consolidating on a below average volume, that's something like there are high chances of a reversal. I'm not saying that it's always happening, but yes, whenever you see such kind of scenarios, there are always high chances that there might be some bit of reversal. So today also, if you can see, Nifty found support near that 450 level just before the 200 DM. यहाँ भी वही हुआ था, 200 DM के just ऊपर से support लिया था. But let's see how the things play out. So the important level to keep in mind is 350, which is the previous downtrend low, ये वाला low जो पहले हुआ था, and today's low 450. So today's low is also important. Why? Because there were some quick moves. See, whenever such thing happens, जैसे कि बाजार गिर रहा था, ठीक है, 450 पे आया. Let's say example, this is 17450, and within 10 minutes, or you can say less than 10 minutes, it was above 550. So this kind of reversals, you can say uptrend, upward reversal, not a for holding market, but yes, for the Nifty on an intraday purpose, you can say it as an upward reversal. So it was of 100 points in less than 10 minutes. So this is something positive to look for. And now this low becomes crucial. So two levels to watch out for on the downside: 17,450, 17,350. Below 17,350, two things will happen. First, हम correction low के नीचे चले जाएंगे. We'll be below correction low. Second thing, we will also be below the 200 DMA, right? And so from there, the fall can intensify. On the higher side, I think the 21 DMA, okay, the 17,800 around level and 18,000 level, which is also very close to its 50 DMA. So on the higher side, these two levels will be important to watch for the Nifty. But overall, if you see, the movement has been very on a low volume. But the problem is that the fall didn't stop for even the last 5 sessions. So let's see how the things turn out, because a lot of events are behind us. So February was expected to be an eventful month, and it was in the first half. And a lot of things came up: the budget, the Fed, the RBI, बहुत कुछ चीजें आई. So last year जब हम एक ही discussion कर रहे थे, whenever we used to be in this stock darbar or somewhere outside the world, outside from the stock darbar, वही कि भाई soft landing होगा, hard landing होगा. But nowadays the third debate has started: the landing होगा कि नहीं होगा. So yes, so now the problem is that the inflation is becoming sticky. So this time also the inflation was 6.4. सामने job का data अच्छा आ रहा है, GDP का data forecast अच्छा हो रहा है, even in the US, in India. Now there are no signs of recessions. मतलब एकदम quick sign ऐसा नहीं है जो ऐसे पहले था कि 23 के first half में go into recessions. There are no clear signal of those things. Plus there are no clear signals of inflation also correcting quickly below 2%. So Fed might again go for some 25-50 bips rate hike. Even the RBI in its minutes, Fed in its minutes, clearly indicated, both came yesterday. RBI का शाम को आया, फेड का रात को आया. दोनों में वही इंडिकेशन था कि अभी रेट हाइक चलेगा, अभी और चलेगा ये. But yes, the scenario has developed such that when lending or no lending scenario in 2023. Okay. So now if we currently on the only lens, we are in a rally attempt because from this day, we have been in a rally attempt and we are waiting for a FTD, that is the follow through day. So once we get the follow through day, which is 1.5% gain on a volume higher than previous session. Please note, it's not above average volume. Many of people get confused that above average volume pe hai and previous day, but it depends on the previous day volume and not the above average volume. So we need to watch out that. Now, if we go to a few sectors, and yes, the research season is almost over, or you can say we are done with all the key results. So there was a mixed trend in the result season as well. But if you look at the banking stock, the numbers were quite good for most of the PSU banks, for the private banks as well. There was improvement in the asset quality, NIM improved. But the fear is कि क्या ये top हो गया क्या? NIM वही बात समझ में आया. So if you see Bank Nifty, it is almost trading 5% below its 50 DMA and trading just 2% above its 200-day moving average. So it's a broad range. Broadly देखे तो यहाँ पे range एक broad है. यहाँ भी same problem है. देखो पहले ये consolidation हुआ. There was a very low volume. Then again there was this fall. Then again the volume was on the lower side. So yeah, this is the major issue. You are not able to get the direction of the market due to the low volumes. But I think the most important part is to follow a method, to follow the rules. Levels follow करो, ठीक है. जैसे ही correction low breach होता है, no mind अगर low volume पे भी हुआ, but correction low of 350 gets breached, we are in a downtrend. And once we get a follow through day, the fresh uptrend starts. Our second thing, we again reclaim the 10-week moving average, and then we reclaim the 21 DMA, 50 DMA. So this is how the path works. Similarly for the bank Nifty, we might get some support. यहाँ भी 39,500 के around support मिला था, ठीक है. अभी भी it is between that 39,500 near that and 200 DMA zone, so might get some support over here. So let's see if we can rebound in the fresh series. Some overhang of ये February F&O series वो आज खत्म हो गया. अगर वो reason है price को settle वाला, then we might get some fresh movement on tomorrow as well as on the Monday. So we need to watch out for those things. So stock specific अगर देखें, then it is very important to look at how the base is getting formed, relative strength कितना है. Down trending या choppy market में आपका stock क्या कर रहा है? Is it trying to outperform? It is holding? Is it falling? वहाँ पे volume कैसा है stock specific? That becomes more important to track. Now, if you look at the auto, so it is trying to find support near its 50 DMA. Right, and overall the correction is very less. The auto, as far as the bank Nifty is concerned or the Nifty is concerned, see, auto is just 4% from its highs, and even in this week only it breached its 21 DM and now trying to find support near its 50 DMA. So here it found a high resistance near its 50 DMA, which you can see over here. But once it reclaimed the 50 DMA, then again it found a good support near 21 DM. So generally, from this you can tell that okay, the auto index has a trend to get support or resistance near its key moving averages. So there are high chances that 50 DMA might act as a good support and things can rebound. Also, I was looking at few auto stocks, and please, yeah, it's a general disclaimer always at the start that the stocks, the index that we are discussing is just for the knowledge sharing purpose, and please do not consider it as an investment advice. So if you can see the chart of Tata Motors, see it has almost completed the cup, and now it is trying to form a handle, and it is just 6% to pivot. आज 200 DMA पे support लेके it is trying to rebound. And if you can see the base count over here in the Tata Motors, it is the stage 2 saucer with handle base. Even if you see TVS motor, yeah, this is also just 5% to break out and almost completed the right side of the base. And if you look at the other Bajaj Auto as well, here also it has completed its cup formation. Now it is forming handle and just 4% to pivot. So if you look at the the auto sector as a whole, the key 3-4 stocks in the auto sector, then they are forming the right side of the base. They are very close to its pivot level. So once you get some bit of momentum in these stocks, just 3-4% momentum in these stocks, when they break out on a higher volume, then the index as a whole, the sector as a whole can do really well. Even the ancillaries. The ancillaries have been holding well. They are trying to outperform the market. And if we look at Maruti, that's also one of the main one. Here, Maruti also found support near its 200 DMA since last two sessions. And if we see some momentum over here, reclaiming this and moving about this consolidation zone, अगर ये भी right side of the base बनता है, so just divide base into two parts. This is left and this is right. So if it moves more ahead in the right side of the base and these Tata Motors, TVS, all the stocks doing well, then auto sector might do well in the next rally. The next one we discuss IT. So yeah, after a long-term underperformance, there has been some relief in the IT, especially some of the selected mid-cap IT stocks have been doing really well. You have already started putting questions, so please wait for 2-5 minutes. So then we will be opening up the session for the questions. So after this one or two sectors we discussed. So overall, if you see over here, the IT sector is trying to find support near its 21 DMA. So since the bottom it had formed in January, around 27,900, there has been a very good rally in the IT stocks, not only in the frontliner, but also in the mid-cap stocks. And now it is trying to get support near 21 DMA. So this is important. Whenever a sector or a specific stock is in uptrend, जब वो uptrend में होता है, then first level to watch out is 21 DM. If it gets support near 21 DM and वहां से rebound होता है, then you can assume the probability of it continuing its uptrend is always higher. The second level definitely in fact is 50 DMA, which is a little deep, but I think if market rebounds and this 21 DMA might give a good support. But if it fails to hold this 21 DMA or volume ज़्यादा आता है 21 DMA breach होने में, then you need to be very careful about the IT stocks as well. But overall, the fear that was that the US will fall into the recession in the first half and all those things. But now if you see the estimates, GDP estimates of the US, the Europe is outperforming. So if these economies, if the US and the European economies hold out, then that will be positive for the IT sector. क्योंकि pricing क्या हुआ था कि यहाँ पे recession आएगा, यहाँ पे problem होगा, GDP नीचे जाएगा, companies का earnings growth है वो सही नहीं रहेगा, but it is not the scenario as of now. I'm not telling you we are out of that scenario, but अभी के situation में वो scenario नहीं है कि हाँ सब problem है. Even the European market is doing quite well. I was just looking at that stock 600 chart. It is in confirm uptrend. Though we are not in a confirm uptrend, but the stock 600 is in a confirm uptrend. And even the US market is doing quite well. The broader market in the US, सिर्फ ऐसा नहीं कि वहाँ के frontliner, but the broader market is above its December का जो high था उसको already cross कर लिया, and now the broader market in US is trying to move about the August high. So globally, the situation is well under control as far as the equity market is concerned. But let's see how it goes, and we will have our eyes on the rules, on the levels, how the leaders are performing, how the stocks are holding key moving averages. But yeah, IT, the good growth in the, like you can say decent growth expectations in the US and Europe is helping the IT sector. Now metals, if you see, after a good move in the first half of the January and hitting a high in the January, वो चाइना का जो रीओपनिंग हुआ था दिसंबर में, उसके बाद जो क्विक वहां से प्राइस बढ़ गया था कमोडिटीज का, उसकी वजह से काफी मोमेंटम आया था इन द मेटल स्टॉक. बट नाउ अगेन, like you can see, the metal is underperforming. It is falling below the key moving averages. And yes, it is testing its. In fact, the recent lows, it is going lower. 250 सबके नीचे है. So you need to avoid this sector because bottom fishing is not the good thing to do according to Odin. So now we are opening the floor for Q&A. So in this room we have our head of research Mayuresh Joshi and my colleague Wakar and Rajshekar are also here. So we will try to answer as many questions as possible. We'll take it randomly, and there's nothing bias in that selection. And please do not repeat the question multiple times because जो chat box होता है वहाँ पे एक junk बन जाता है, so it becomes tough to scroll in the live sessions and reply. In case if we miss to answer some question and it's very important for you to get the answer today or tomorrow, then you can always email us the questions to our support team and we will answer it as soon as possible. So guys, the floor is open. Okay, so first question, let's start with Balrampur Chini. So after a very good uptrend till the last March, the Balrampur Chini is a bit under pressure and it is, oscillating near its 200 DMA and currently it is below its all key moving averages. If you see the earnings growth was not decent in the recent quarter, even the revenue growth was down. The number of fund holding has been down. So overall, not a good stock to look for now, but wait for some, good earnings. एक दो क्वार्टर अच्छा अर्निंग आ जाता है, कोई बेस फॉर्मेशन बन जाता है, like some cup with handle double bottom. If it is able to form some base, then one can look at the stock. But otherwise, it's an avoid. And overall, if I discuss couple of points around the sugar sector, see, it was a good story last year. Like so, cyclical वाला sugar का था, उसमें बात कर रहे थे कि due to ethanol, अभी ये cyclical नहीं, yeah. So that was always the talking point for the sugar sector. So ethanol was a tailwind, is a tailwind for the sector. But one should understand, like I was looking at few of the numbers of the sugarcane production. So Maharashtra contributes almost 40% and UP 28%. But the crop of sugarcane in Maharashtra is expected to go a bit down, right? Because the sugarcane yield is down due to early maturing. अभी अगर sugarcane yield महाराष्ट्र में थोड़ा डाउन होगा, which is the number 1 state for sugarcane in India. So वहां से थोड़ा प्रेशर आएगा इन लोगों पे. See, there are two things. ऐसा नहीं है कि sugarcane की कमी की वजह से कुछ मेजर प्रॉब्लम होगा, because lot of excess is there, क्योंकि वो इथेनॉल में यूज हो जाता है. The excess is getting used in the ethanol. But now, if you see the sugarcane production is down, so looking at the current inflation scenario, you can assume, that's what I think, that government might not want to have a higher sugar prices. So there might be a chances that okay, ethanol का जो blending है उसको थोड़ा 6 महीना पीछे ले जाए, या फिर जो उनका aggressive target है उसको 2-4 महीना आगे पीछे करे. So that might be the scenario. But yes, overall, if the production is less, because the capacity utilization इनका अच्छा है, ethanol से पैसा आ रहा है, sugar से पैसा, ठीक है, तो कहीं पे वो थोड़ा कटौती आएगा, उसकी वजह से there might be some issue in the stocks. But yeah, overall the downside potential is not huge because there is no major problem. As I told you, there can be some adjustment between the utilization in the sugar and the ethanol. But yes, overall, if there is some problem in the production, because see, April तक ये चलता है, अगर April तक और खराब डेटा आता है, so this data of February March for the sugarcane production is very important, क्योंकि अगर वहां से भी थोड़ा प्रॉब्लम आता है, then there might be some issues that these mills can face.
Well, Nishita, hi. I'll take few queries now.
Sure.
I'll start with Nucleus software. Mr. Shiva has asked about Nucleus software. Recently, the stock went up more than 50%. The major reason is that the company has come up with a good set of numbers for the December quarter. You can see here in the quarterly earnings tab on the left side. The EPS has grown more than 300% and sales have grown 43%. and the results have surprised the market, and that is the reason the stock went up more than 50%. Overall, it's very small cap stock. Before this 50%, the market cap of this company was around 1,000 crores. So it's a very macro company. Uh, Technically, also the stock broken out on the day of results, and it has its power to pivot. But now, is it the right time to buy? Is the question asked by Shiva. Definitely, now initiating fresh position is not a good idea because the stock ran up more than 50%, and currently the stock is heavily extended from the key moving averages. So definitely, all the uh, good work the company has done is already priced in by the stock. So from here, these kind of movements is not expected. We might see some consolidation happening in the stock going forward. So initiating fresh position at this point is not advised. If you have already taken position, they can you can continue to hold it depending on the buy price at which you have bought it. Next is Hero Motors. Hero Motors, fundamentally a very strong company. Uh, it's a leading company in the two-wheeler segment in India. There is no doubt about it. But technically, the stock is not looking good at this current moment because of maybe electric revolution which is happening in the market. Hero also trying to catch the market with the introduction of electric vehicles, but uh, the stock is not performing well. At the current moment, the stock has breached its key moving averages. Even the fundamental rating has also deteriorated because previously the stock has reported negative growth in its EPS in the last quarter, that is September quarter. And technically also the ratings have deteriorated mostly because of underperformance of the stock compared to the market. Clearly, all the moving averages are converging because the stock has done nothing in the last couple of months or more than that. The stock has moved sideways around 2600, 2700 levels. Currently, the stock is finding selling pressure. You can see the volume also on the higher side, which is not a good sign. When the stock is going downwards, ideally we want the volume to be on the lower side, but these high volume selling indicates selling by the institutional investors, which is not a good sign. We would want the support from the institutional investors in a stock because they will give good support to the stock in times of turbulent times related to market or any economic turbulence. But exiting of institutional investors is a bad sign technically and fundamentally as well. So overall, stock is in the trade zone. Uh, if you have taken position and if you have this stock in your portfolio, you should exit this stock because of uh, technical ratings and technical underperformance. I'll take M&M as well, another automobile company. Mahindra has done very good recently in the last 1 year. And previously also it has done very good because of introduction of new models in its product wise. It has come up with good set of SUVs and medium range cars. You can see the stock is very much in outperformance when compared to other automobile companies. The stock has also, if you compare the stock with Nifty or Nifty mid cap or Nifty auto, clearly the stock is outperforming. That is a very good sign of a leading stock. Currently, it is very resilient also, even though the market is not looking that constructive at this current moment. This stock has a good support at its 50 DMA, and 50 DMA is not broken in this current turbulent times as well. This is a very positive sign. Uh, technically it is looking very good, but EPS is slightly on the lower side, which is not which is a sign of a concern. But it's a very resilient stock, and the company has been coming up with good set of models, and there is huge demand for the products of M&M, and they are into electric segment as well, and the electric segment is also doing very good for this company. So the growth prospects of this company are looking very strong. That is the reason the stock is also very much outperforming it other competitors. If you are looking for a entry position, let the stock come to its buy zone, that is above pivot. Another 4% from here, it will be back to its ideal buy zone. Then you can take a call depending on the volume and price action on that particular day.
Raj, Vakarya, can I take some queries now?
Sure. Okay.
Yeah. Rishit, can you give me the chart for Astral? Yeah, can see the base formation now. So as you guys can see, the stock did break out from a double bottom base and made a high of 2654 and then probably went on declining. Can be attributed one to the result front. If we talk from the result perspective, I mean the revenue growth was fine, but on account of your high cost inventory that lead to a huge drag on the margins. So the chemical prices were high, the input prices were high. That's what led to the EBITDA margins declining by around 300 bips to 14.67 percent. And going forward as well, situations is expected to improve. But I mean, in Q4 as well, you can see margins hovering around that 14 to 15% mark as guided by the management only. The positives is that in terms of the capex plans, the new product additions in your water tank and your valves business is pretty much in place. Your volume growth is reiterated by the company at 15% for the next couple of years. But from a technical and an O'Neill perspective, if you look at it, the buyer demand is very weak at D minus. Price strength is also weak. I mean, today's action was kind of positive where it tried to form a potential bottom with volumes and tried to close in the upper half of the day's range. The negatives are many at the moment in terms of lack of fund holding support at the moment, plus the stock trading well below 15% below the pivot. Off highs is also nearly 30% if you look at it. So if the stock re-breaks out, I mean, if we talk about the 2,800, 2280, 2290 levels to nearly 2,300. If you look at it, that is the 0 to 5% from the previous is what I was calculating. And if probably it comes back to that range on above average volumes, and then with your RS line trending higher, then probably at that moment one can look at this stock, but not at this moment when the stock is 15% below the pivot. The other, Rushit, we can look at it is Aarti Industries. Yeah. So I mean, considering the technical chart at the moment, not a stock to have in the portfolio, considering we don't look at bottom fishing. So with the RS line rating of 13, RS line trending downwards, stock trading well below the 50 DMA, 2110 EMA as well. Your fund holding has been declining 15% on a quarter-on-quarter basis. All your parameters are weakest at the moment. If anyone was probably holding the stock should have exited when the stock broke down on its probably 200 DMA or the 50 DMA levels. And I mean, the stock is probably trying to find a potential bottom, but till the point in time, looking at this chart, probably the 200 DMA is not reclaimed. one should not probably look at this stock, which is around 40% of highs when probably even in the choppy markets, if you talk about it, the current market, that is the 50 DMA, Nifty 50 is still around 7-8% of highs. Just a second. Mr. Ganesh Vasudev has a question. In general, can we say that if the stock price reaches 200 and moves down, it exits the stock is a wise decision? So why I talked about 50 DMA or the 200 DMA is like when the stock forms any base pattern, moves higher, the stock is showing some signs of momentum, probably spreading above your 21 DMA, 50 DMA, and the 200 DMA. So considering maybe the 50 DMA can be around 8 to 10% below the pivot, your 200 DMA can be more. So considering the proper risk management appetite plus the risk-taking appetite by individual investor or the individual trader is one you can probably look at it. If your risk appetite is getting vanquished, maybe at the 50 DMA, exit out at the 50 DMA. If you can take a little larger set of, the stop losses can be a little more, then you can look at the 200 DMA mark as well. But considering the O'Neill perspective, the canceling parameters, what we at O'Neill always advise is that if the initial stop loss is what we are talking about, it should be at the 7 to 8% levels. The other, the trend lines, the 200 DMA, 50 DMA, or the 21 DMA, we talk about it more from the profit booking perspective, not from a stop loss perspective. Can't take it to the stop loss front as well, but on the profit booking perspective, if someone is in the profit maybe in 15, 20, 25% range, and then the stock breaches the 21 DMA or the 51 DMA, can exit at that moment to probably safeguard your losses. That is what my point was. The other, Rushad, we can look at is Indian hotels. Yes. So if we talk about Indian hotels, it is forming another consolidation base. The stock is still 12% to pivot. From a canceling perspective, really good considering the market at the moment. EPS strength is fair, but look at the institutional support from the stock. For the stock, number of funds holding probably 40% QOQ at a market cap of 43,000, 44,000. It's really good. Buyer demand is really good at B, mainly coming from the strong numbers that is being putting in terms of strong revenue growth for Q3 FY23 of around 51-52%, really backed by, if we look at it, good growth in your occupancy rate, your AR, your ARR, your RevPAR, and your occupancy is expected to grow beyond your 70% in both your leisure and your business hotels. Plus, the Avant 2025 strategy launched by the company, where the company expects to build a portfolio of more than 300 hotels in the next couple of years, register EBITDA margins of more than 33% by 25-26, plus become a zero debt company by April 2023. So overall, the company is probably on track for that. Rushad, can you just show me the stage count? I missed on the stage count. Yeah, that's it. So probably this was my only concern. So stage 4 or higher is one, what from a technical perspective, what we always talk about is our later stage base, which is probably have a higher chances of failure. And so probably considering the choppy market as well, these stocks that are forming higher bases have a higher chances of failure. Probably at this moment, if the stage count got reset, considering fundamental parameters at place, one can look at the stock if your stage count gets reset at the moment. Yeah.
Okay, so I'll take over. So yes, we don't have any issues in taking up the air conditions company. It was just that we were taking you, as I told, that we take it on a random basis. So if you look at the air conditioning company, I think it came into picture more yesterday, as in the tough market in the last 2-3 days when the Nifty was falling. These air conditions company did well. If you look at the Voltas, and if you're asking about the share, then yes, the Voltas, Blue Star, and Lloyd, these three Indian companies contributes almost 50% of the market. And out of that, Voltas is having the total of 25% roughly of the market in the air conditioning. See, now the point is the demand is increasing. दो चीजें, एक तो discretionary spending है, that has been improving, not only the tier 1, but if you look at the graph of tier 2 cities also, वहां पे भी एयर कंडीशंस का कंजप्शन इज इंक्रीजिंग. एंड इफ यू कंपेयर विद द ग्लोबल स्टैंडर्ड्स, अगर चाइना को देखो, यूएस को देखो, तो नंबर ऑफ एयर कंडीशंस पर पर्सन, राइट, पर 100% इज हायर, 40s 50s में है वहां पे. अपने यहाँ 10-20s में भी अभी चल रहा है. सो देयर इज अ ह्यूज गैप टू बी फिल्ड इफ यू कंपेयर इट विद द ग्लोबल स्टैंडर्ड. बहुत जगह है इंडिया में एयर कंडीशन मार्केट के ग्रोथ का. एंड दीज प्लेयर्स along with the make in India, the PLI, the components also are now getting produced in the India. If you look at the air conditions, see, there are four main components: compressor, condenser, blower motor और PCB circuit. ये चार 55 to 60% of the cost होता है AC बनने का. So now we are manufacturing these air conditions in India, and I think a lot of improvement after the Make in India, the PLI in the air conditions. Yes, Amber Enterprise is also one of the questions. I will take that also. But overall, this time the summer is early, and the spending of the people, they are ready to. So एक पहले होता था एक luxury category AC, but now it is becoming a requirement. That's how the transition is. This time the summer is early. It looks like generally the Fab is not this hot, but if you overall look at the department's data, the then weather department data, then yes, the summer is hot. This time it has started early, and that's why some good increase in the price of these stocks, because some early momentum with the higher summer coming early. So overall, yes, it's a good Make in India opportunity with these key components, these key players. So Blue Star, it's above the pivot, almost 12%. Need to wait for it to come a bit down or form the fresh base. If you look at the Voltas, and it has just reclaimed its 200 DMA on a very good volume. If you can look over here, that's positive. But overall, the sales number, the earnings, as well as the number of fund needs to be improved. Let it give some time. Maybe एक quarter के result के बाद एक base बन जाएगा उतने time में, और एक base बनने के बाद अच्छा momentum आ सकता है. So need to wait for the base formation. And if you look at the Amber Enterprises, it is consolidating. So the demand expectations are robust, but the margin growth is not that good, and already it's trading at a high valuations wise also. So overall, it is not picking up. It is still trading below its 50 DMA. Here also, the number needs to come on. एक profit दिखना चाहिए. जब तक profit नहीं आएगा, earnings improve नहीं होंगी quarter on quarter basis, the stock price won't be that supportive. So need to have a good earnings over here. टेक्निकल जो डैमेज हो गया है वो रिपेयर होना इंपॉर्टेंट है. 50 DMA reclaim followed by 200 DMA reclaim and a good base formation to be formed.
Rushit, let me take some tire companies. There was a question on tire companies. So if you can just put on Apollo Tire, JK Tire, just put on Apollo Tires has been the most resilient one. So guys, but there was a particular question on tire companies. 3-4 things are happening here. One, if you look at the demand scenario, right? Let's analyze the demand scenario. The demand scenario looks very, very resilient. Why am I saying this? Because OEM has a reasonable order book at this point of time. A lot of the issues for OEMs in terms of semiconductor issues, supply chain problems are largely behind at this point of time. The kind of bookings that have happened, right? there is a significant order backlog that these companies have in terms of their balance sheet. So from a demand perspective, as far as the OEM or the original equipment manufacturing market is concerned, it remains very, very resilient. When it comes to the replacement market, that remains extremely strong as well at this point of time. One more trigger in terms of the replacement market, which can turn out for tire companies, is that the anti-dumping duty, which had been levied till December 22, is due for revision. Now, if that gets extended by 6 months to 9 months, that gives an additional fillip to these local guys, specifically in terms of imports coming in from China, Thailand, and Korea. So that is as far as the demand situation is concerned. Let's look at the supply angle now. In terms of capacity utilization level for most tire companies, it's very reasonable at this point of time. If you look at the capacities that they have added, right, through the last 3 to 4 years, including the couple of years that we had COVID for, it's quite reasonable, and there is no massive expansion that is expected in terms of tire capacities for the existing players as well. Europe as well. Mexican operations for a few companies like JK Tyre as an example, which has Tornel under its operations. So to that extent, the kind of expectations that capacity utilizations will remain stable or improve going forward as demand remains robust will also favor a supply dynamics. Third, in terms of input costs now, input costs have come down significantly. So if you look at nylon cord tire, if you probably look at crude derivatives, everything that probably goes, including carbon black as an example, have come off quite significantly. They had to grapple with issues like most commodity companies with high cost inventory for the last couple of quarters, maybe even partially in Q4. But with restocking at lower levels for key input materials, margin profile should remain very, very strong. And as leverage is also not expected to improve quite significantly, the bottom line impact, what we call on the O'Neill lens as the EPS rating, right? The EPS growth should be quite reasonable for most of these tire companies. Last but not the least, a few of the companies are obviously doing very, very well. If I'm not mistaken, this is Apollo's chart, right, Rushit? Yeah. So Apollo's chart is very, very resilient. You look at what that stock has done. Even during that massive fall that we had seen in the last 3 to 4 months, this stock has probably moved in that range of 3.5, 3.10 to 3.30, 3.40. So I think it's very, very resilient. One additional feature for Apollo Tyres also becomes the kind of exposure that it has got in the product segment. So the product-wise exposure that Apollo has, the kind of exposure it has towards both OEMs, the replacement market as well, and key select regions in the export market is very, very critical as well. So if you analyze all these aspects in terms of the sector as a whole, expected to do very, very well. Apollo has been very, very resilient, because I remember that we had this stock. Unfortunately, we had to take it out because that was one of the 2 stocks that was there. You can't just have 1 stocks in your recommended list. And therefore, I think this remains one of the best resilient stocks within the tire space. You've got players like a JK, you've got players like Balakrishna, but you're never really sure in terms of the demand environment, considering overseas operations at this point of time. If they start getting into a slump, right, maybe not this quarter, in the coming few quarters, earnings might take a hit on the elevated numbers that they've already posted for this financial year. Also, the EPS rating, the RS rating probably are not conducive enough. So I think if you probably look at the structures within the tire space, Apollo is very, very resilient at this point of time. 8% from pivot, maybe a further pullback on that. But generally, I think the sector dynamics are looking quite favorable at this point of time. Same thing, Dhruv, with Ceat as well, right? I think, Rushit, can you pull up Ceat in terms of the chart? So the dynamics remain the same, guys. I think the product mix might differ company to company, but generally, I think the trend on some structural parameters for these companies remain robust. Issues again related to high inventory, etc., playing out, their geographical presence, and therefore I said for the sector as a whole, I think the RA strength probably is off for Ceat, for JK Tyres. I think it will be off for Balakrishna as well. Apollo remains one of the most resilient tire stocks in my opinion. Really don't want to talk about MRF. बड़ा हाथी है, 5 digit का कुछ करता नहीं है और 3 रुपए का dividend देता है. So I think if you want to stick with a decent story, a good story where earnings growth is stable, my sense is Apollo has shown strong resilience as well. Anything I need to cover, Rushit?
I think it's well described on auto Tyres. We can move on to other stocks related queries. I think.
So you can take, I think somebody just asked, I just want to answer a query on the portfolio part. I mean, somebody asked this question. I'll just answer that and then you can take those queries again. Just
Sure.
give me a minute. I think let me just find out what this query was. Prashant had a query. Most of the breakouts are feeling, is it not a good idea to buy large cap? So Prashant, I think on the O'Neill methodology, what we are looking at is how the market structure is, right? How the main index is placed, how sub indices are placed, and how different stocks are coming in terms of the structure based on the first two factors itself. So to a large extent, our method probably works in terms of the overall structure itself. Rushit in his opening remarks has just mentioned, because of the fall that you saw in the US markets, that market has come under pressure. So that's come in terms of our own lens in uptrend under pressure. European stocks are holding up pretty well. So if you look at the stocks, you look at the DAX, you look at the CAC, is holding up well. KOSPI, the Korean index, was upgraded a few days back to a confirmed uptrend, and you suddenly had a bunch of a couple of distribution days there as well. So it's a very uncertain environment. 2023 is relatively going to be a tough year in terms of that momentum being maintained. And therefore, I think the whole logic in terms of what we use at O'Neill, right? Some sectors taking leadership position. Within those sectors, it might look that these stocks are at 52-week highs, case in point being capital goods, case in point being infrastructure, might relatively do better, right, in those phases of the market, and you have to be relatively quick. By relatively quick, I mean that somebody had asked about the portfolio moves as well. Generally, I think whenever you've spoken, if you have attended Cancel 1, Cancel Level 2, we always say that in a market like these, or generally when the markets are very, very uncertain in terms of the future outlook itself, selectively positions have to be taken, not looking at the index. Index is primarily a key factor, like we did right last time or this time around, where key support levels are probably taken off, and where stocks out of stage 1, stage 2 are clearly breaking out. But a couple of factors here again, have small positions in those stocks itself, and very, very small amounts involved. What Vakar was mentioning in terms of entry and exits, right? We'll also be very, very cognizant. Now 17,353, which is the budget low, also very close to the 200 DMA. If that comes off, right, we might get out of the market, or we'll monitor the 21 DMA in markets like these. So any volume activities is substantial. The nearest key moving average, which is the 20 or the 21 DMA, whatever you want to keep, 20 or 21, getting off markets at a market structural level, breaching those averages is something to watch out for. One question that can come is, volumes are pretty low at this point of time. You all understand that, but when the flurry of volume, if it comes through, right, on that downfall, for the index, for the sub indices, and for certain stocks as well, we are not going to wait. So I think wanted to get that very, very clear in terms of positioning for the market, in terms of the trades existing and exiting them as soon as possible. So model portfolio is basically an ideation in terms of stocks that we believe can do well in certain market conditions. Ideal portfolio, again, I'm repeating this, ideal portfolio size anywhere between 13 to 15 stocks, which ideally means 6 to 7% weightage for each stock. So if you've got 100 rupees, you can assume if 4 stocks are added, around 20-25 rupees put in. Again, because we entirely believe in the concept of pyramiding up, right? And we don't have a system right now, I admit that, but even if you put in half in markets like these, ideally you should be putting, if we add 4 stocks, 25 divided by 2, which is 50% allocation, depending on whether a move that stock gives or the bunch of stock gives. So around 12-15 rupees, which means an ideal amount of reward and risk practices that you do. This is this phase of the market, but in any other phase of the market also, if you get into a confirmed uptrend, the logic probably applies is the same, right? So 12 to 15 allocation for one stock, roughly around 6 to 7 orders. Guys, you can take it forward.
Thanks, Myresh. I'll take queries now. Triveni Turbine, the question has been asked a couple of times. This is also a similar story. Like if you look at the technically, most of the stocks are doing the same pattern. They are moving sideways, and most of the key moving averages such as 50, 100, 200 DMAs are converging. That is because from the last 100 sessions or 200 sessions, they have been moving sideways. Similarly, the Triveni stock has also done the same. You can see here. Now it's a very tricky position for these stocks.
We need to change it. Like Triveni Turbine.
Oh, sorry. Sorry, I picked Triveni Engineering. Okay, Triveni Turbine. If you look at the pattern, what you see is it is resilient in this current market structure. The stock is just 4% of its of highs. Definitely a resilient stock. Clearly trading above its moving averages. Technically a positive sign. That is the reason its RS line has also is trending upwards, and recently it has hit blue dot, indicating outperformance of the stock. If you look at recently in this current week itself, the stock has broken out from its stage one cup with handle base pattern, and the volume on the day of breakout was also considerably very good. Uh, Technically, it is looking very strong on most of the aspects. Fundamentally, also the EPS rank is 75, indicating a fair, fundamentally a fair company. Recently, the company has come up with good set of results as well for the December quarter, recent quarter. The EPS and sales have grown nearly 35 to 40% year-on-year basis, which is a very good growth, considerable growth. Given the market structure, this is a very resilient stock. It's very good stock. You can keep this stock in your buy watch list, or if it comes to its again blue zone, which is ideal buy zone, you can add it to your portfolio. If the volume on that particular session is also should be on the higher side, if you are adding the stock to portfolio, that indicates a good amount of demand for the stock. Moving on, I'll take another query. PFC, this is our portfolio stock. We have added this stock recently on this particular day on February 16th. You can, and since then the stock has moved sideways. The market is not doing well in the last 4 to 5 sessions. The Nifty has been falling. And that is the reason most of the stocks, generally 75% or 80% of the stocks follow Nifty's direction. So it's very difficult for any stock to outperform the general market in these kind of times. If the market structure improves, definitely these stocks will outperform the market, and they'll give good amount of return when compared to Nifty. Let's say Nifty moves 4 to 5%. This PFC will is a potential 10 to 15% gainer. That is the reason we have added. It was looking very good both on fundamental and technically. Currently, the stock has supported its 50 DMA. We are holding it because there is no major selling happening in the stock. The volumes have completely dried up. You can see here, which is not a good sign. However, it's a good sign because the stock is not doing much on the price action front as well. So there is no action happening in this stock. Most of the there is no volume activity happening. Institutions are not taking, or institutions are not buying or selling in this particular stock. Whenever the market structure improves, then definitely these kind of stocks will outperform the market.
Raj, I will take one. There is one question a couple of times by Jignesh that
Okay.
Is there a new feature development introduction planned on MarketSmith? So yes, Jignesh, like every now and then we come up with the new features. Our product team is always active. The research team is active to bring updates in the website, in the research, and you might have also always seen that. And specifically, you are looking for industry group numbers. So I don't know which exactly you are referring to, but if you want to shortlist the stock, there is always a shortlist you can get for industry group. So if you go to the overall build your own screen, over there you will find that there is a filter for industry group as well. Okay, that's fine. Like, yeah. So if you go to build your screen, filter Indian stocks.
So here,
In the first one only, MarketSmith rating. There is one, the group ranks. As Raj is indicating, you can select the best one that you look for, 60, 40, whatever. And with the other filters in place, you get your list. So Jahangir has a question. No problem if you repeat that. When do we restart counting the base after 200-day break, but not trended down and the price turned back up? See, the base formation, the reset, the count 1, 2, 3 is not dependent upon the moving averages. So if you, I will share a link just in 2 minutes with you in this group about how to count the base and how it is formed. So there is no connection of this base with the moving averages once the low of the previous base, जैसे कि base 2 है, let's say for example over here, अगर this was the base 2, right, the flat base as Rajshekar is showing you, and the low was 270 over here, right? And after that, last month in December, January, it made a fresh low. It breached that base 2 ka low breach ho gaya, then again the base count is reset to 1. So that's how the base count gets reset, and there's no connection with the things. So Aarti industry, the question from Irfan already covered. Aarti industry, Vakar has already covered. We can take one rain industry now. See, do rain industry, you need to understand its business. Like it's more of mainly in 3 segments. That is in the carbon, cement, and the advanced material. So no doubt about the cement. The cement business is doing quite well, but I think this stock produces the raw material for the aluminium, graphite, carbon black, टाइटेनियम डाइऑक्साइड, ये सब का जो मैन्युफैक्चरिंग होता है उसके लिए रॉ मटेरियल बनाता है रेन इंडस्ट्री. सो व्हेन दीज कमोडिटीज आर इन अप साइकिल, जब यहाँ पे प्रोडक्शन अप साइकिल में इसके प्राइसेस बहुत हाई है ये कमोडिटीज के, that is the time when the realization, the demand for the rain industries product increase, because that constitutes almost more than 50% of the total revenue. So whenever you will see that there is a uptrend in the commodity cycle, right, especially the aluminium, graphite, and so that is the time when the rain industry outperforms on a fundamental or on the growth story front. But currently you might be seeing that the metal is under pressure. We started the discussion when the sectors were there. So overall, if you can see over here, the earnings is due for this quarter, so need to be away from the stock. The second thing is it is trading below all its key moving averages. Yes, as the Raj is indicating, the earnings are in 4 days and we are trading below all its key moving averages. So let it give time to form a base. अगर अच्छा result आता है, base formation complete होता है, and that is a good time to relook at the stock. But currently, the first focus should be it should reclaim the moving averages. So fresh entry according to O'Neill methodology is not suggested over here. And yes, you should maintain a stop loss whenever you are investing in such stocks.
Mr. Ganesh is asking a query: why importance is given to DMA, not to EMA? There is no specific reason in terms of simple moving average, that is DMA. Equal weightage is given to each of the day, whereas in EMA exponential moving average, highest weightage is given to the latest session, and that will not incorporate the previous sessions. That is the only reason. If you are looking at 200 DMA and 200 EMA, in terms of DMAs, you'll get a more clear picture how the stock has performed in the last 200 trading sessions. Whereas if you are looking at 200 EMA, then on the calculation part, the highest weightage is given to the latest trading session. So you will not get an overview of how the stock has performed in the last 200 trading sessions. That is the only reason we do not. Sorry. sorry, some disturbance was there. That is the only reason why we consider most of the times DMAs. In specific times when we are looking for a exit, and when the simple moving averages are very far from the current market price, then we'll consider EMAs as well. Because if you wait for the DMA breach, it might be stock might be our profits might be eroded, or the stock might be falling more than our stop loss of 8%. So in those times, importance will also be given to EMAs. So depending on the situation, we give importance to DMA or EMA.
Raj, Samyak has repeatedly asked about that which small cap stocks are holding good in the current market. So ideally, we don't have a list as of now, but yes, I think a couple of minutes back, Rajshekar showed that how to prepare a list, right? So
Yeah.
you just go and you can prepare a list maybe, and yeah, that will be more benefit. Then Jahangir has a question that I'm a new subscriber of MSI. Yes, you will get all the signals, the buy list, the sell. You will get the watch list. Whenever we add the stock, you will get notification email. Same when we remove the stock, we will get it.
Okay.
Rushit Raj,
Yeah.
yes, last 1-2 queries, and then probably we can wrap it up. We are already past the designated time.
Yes, yes. We are already 5 minutes past the designated time, so we can take a couple of queries and we can.
Let's take NTPC.
Sure.
There was a good move in NTPC couple of days back. I think the government, as you know, that imposed the change because the expectation is that the power demand might increase. So 100% utilization for the coal plant is the memo that the government has given, that all the companies needs to go for the maximum utilization, and that's why some power companies were couple of days back in the momentum, especially the NTPC. Tata Power was in momentum. Other power stock, PFC was in momentum. So a lot of power stocks were moving well, and overall the sector is doing well because the demand is robust as far as the power is concerned, and with the summer it is expected to hit a record high, and that's what the government is preparing. So last year there was some talk that कि अपना coal खत्म हो जाएगा, power blackout, but ऐसा नहीं था. We were able to procure the coals, we were able to manage the overall coals, and especially if you look at the technicals of the NTPC, it is currently forming a flat base, 2D, and it is just 7% below the pivot. And I think the consolidation is very healthy. No two ways about that. It's a healthy consolidation. So once we get a breakout on a very high volume, that's when you need to look at the stock. Otherwise, the ratings are decent. The EPS of 74, price strength of 66, and it is improving. So once we get a breakout, maybe it might cross 70, 75 and hit a new 52-week high. The buyer demand is also decent. So yeah, overall, no major issues with the technicals, but need some time. Okay, let's take the last two. One is ion exchange, and the last is BEL. So there was a strong breakout from the stage 4 base, not a healthy base to go for, because generally the probability of gains are less. क्योंकि यहाँ से जब fall होता है ना stage 4 base के बाद, then it is always very sharp. But yes, this is a long-term multi-bagger story, ion exchange, one of the leader in its own segment. So there are no major issues in the stock. But the 4th stage bases are always generally risky. Currently, it is extended from its 200 DMA and also the 50 DMA. तो अगर market में छोटा सा भी correction आता है, so 50 DMA is 18% below. Right, so it might even 21 DMA is 12-13% below the current price, so it might pull back to 12, 21 or 50 DMA. But yeah, if you are holding the stock from long, then not a problem. You can use some technical like 50 DMA or 200 DMA as your stop loss level, and regularly book the profit in such kind of market scenarios. Otherwise, no two ways about the story. Fundamental fund holding काफी increase हुआ है. All the ratings are good, but yeah, it's the high stage base, so you need to manage your risk by using a good stop loss. The last question of the day, BEL. The rest, if very important, you can always email us.
Sorry, Rishit, what is the last? I missed it.
BEL. Bharat
BEL.
Electronic.
Okay, BEL.
So it is oscillating near its 200 DMA. So it was in a good uptrend the last year, but after making a high of around 110, 12, it is moving down. It has breached its key moving averages, and now एक बार 200 DMA it also breached last month, but now it is trying to hold around that level, and maybe when it retakes the 50 DMA and forms a fresh base, then overall the fundamental story, the order book, I think the order book of these defense companies, especially after this Make in India thing, has gone higher. We are now, the BEL is also trying to export. Recently also it collaborated with a couple of important government agencies to develop defense instruments, and also overall they have a very strong order book. But yeah, once the margin is stable at a certain level and you see that the technicals are improving, that's the good time to look for the stock. So that's it for the today's session. So what is Jahangir asking? Do we consider high volume reversal candle during the analysis? So yeah, whenever there is a reversal, volume is always important. If there is upside reversal or a downside reversal, you look for the volume. And second thing that you need to look for is closing kahan pe. अगर closing upper half में है, then that is good. अगर closing day low पे है, then it is bad. Day high पे है, then that is very good. So where the closing is, it's important. Top quartile, lower quartile. So not only the volume, but you should also look at these few things. Yeah, link about the base. Just a minute.
Here you can browse all the
article.
learning articles. Yeah. Every week we come up with a learning article which is relevant in the current times. So you can browse this page. You'll get a lot of methodology related articles, and thematic articles are also kept here.
Okay, so I also got the link shared in the group. Okay.
Sure. Yeah.
So that's it for today's session, guys. I hope you got some information, some knowledge, and it was a fruitful one for you guys.
Yeah. Thanks everyone for joining. So we'll be coming up with a pre-bell every morning in the around 8:45 in the morning. You can tune into our session as well to get overview of how the market is going to perform on that particular day, and what are the some methodology related information is also explained in that session. And we'll also be coming up with the emailers and portfolio related stuff on every day-to-day basis. You can look into those stuff as well to be updated with our methodology. Yeah, thanks everyone for joining. I'll be closing the session now.